Hey, it's Mike over at Cross Country Mortgage, and it's Monday morning time for Monday morning mortgage update for the week of June the 17th, halfway through the month. Hope you all had a wonderful Father's Day weekend. I got to spend time with my son. My daughter's in Montana, so I got to talk to her and spend time with my dad. So let's talk about what happened last week, what's going to happen this week. I always try to give you info so you can talk to your buyers and sellers and be more impactful. Last week, we actually saw a 29 basis point improvement, which means rates got a little better. Improvement in the bond market. Money flowed into that bond market. And there's two things that really were impacting why we saw an improvement. Number one, the Fed met last week, ended their meeting on Wednesday, had a press conference. What did they say? They were actually a little bullish on the market. What that means is they're saying, hey, one rate cut. We're not going to do more than that unless we see some signs that inflation is really coming down and getting under control, maybe one rate cut in 2024. So they came out basically and said it. We've all been waiting for them. They didn't raise or cut rates. They left them alone. But the market really doesn't believe them. The bond market and bond traders and economists really believe we're starting to see inflation under control. We saw some signs of that. No question about it. The CPI came in lower than expectations, still showing inflation going up, just not up as fast. PPI came in lower than expectations. And so the Fed's saying they're not going to raise rates more than once. The market thinks that the inflation is starting to get under control, and that's going to cause the Fed to cut rates maybe at the next meeting or the meeting after that. So a little bit of a difference in what the Fed's saying and what the economists and what the bond traders are seeing. So we'll see how this plays out. We also have a short week this week. Wednesday is Juneteenth, so the markets are closed. We'll be open, but there's no trading, so no locking of loans, no trading in bonds and stocks. So what are we looking at this week? I always try to give you a couple things that are going to impact the market, and I've got a program of the week I want to share with you. So retail sales is a big report this week. It's really the biggest thing that's going to have the possibility of moving the market. There's not a lot of additional data that will move the market this week, and that comes out tomorrow. And really what this is telling us is, are consumers buying stuff? Last time the retail sales came out, there was no improvement. There were some signs that the consumer was under pressure. They were spending less, and the market rallied. We actually saw rates improve because, remember, a weaker economy is stronger for mortgage rates. So what are we going to see this week? There's some indications that the consumers are maxed out on their credit. Are they spending money in cash or debit cards that may not be reported to, with the credit debt? But there are definitely some signs that the consumer is under pressure. 90-day delinquency on cars and credit cards, the highest it's been in 13 years. Savings rates, the lowest it's been in years. Pandemic savings. So, we had 3 stimuluses during the pandemic, and signs are saying that money has gone. It ran out the end of March. So people don't have that pandemic money to rely on anymore. And now it's starting to have an impact on their spending. Obviously, inflation is up, so people have been spending less, going out to dinner more, maybe letting those tires wear a little longer before they buy some. And last week, consumer confidence was down, that confidence in how the economy is doing. And 3 months in a row, we've seen lower consumer confidence. So again, there's some signs that consumers are under pressure. We'll look at this retail sales report that comes out tomorrow. If it's weak, that's good for pricing, good for rates. If it's stronger than expectations, then we'll see rates actually get a little worse. Second thing that's going to move the market is all the Fed members now are going to talk. They had their meeting last week. They really haven't been able to say anything for a couple weeks. So now they're coming out. Are they going to be in line with Jerome Powell's press conference last Wednesday that there really is probably going to be only one rate cut, or are they going to shift? We've already seen a couple Fed members speak today, and they basically have said that, one rate cut. So we'll be paying a lot of attention to all the Fed members that are speaking this week. And the last thing is a program of the week. We have a new program. Affordability is a big issue with buyers, especially first-time home buyers. There's a lot of down payment assistance programs. And I always say these down payment assistance programs, they work, but they have their pros and cons. A lot of them are more expensive because the program bakes in that down payment assistance into the rate, into the cost, and other things. Well, Cross Country has a program, a 1% down conventional loan, 1% down conventional loan, and additional funds in the form of a grant that the borrower doesn't have to pay back. So this is a great program. If you have a first-time home buyer that's really on the fence about buying, maybe doesn't have the funds to buy, we have this program plus a handful of others that really bridge the gap in affordability. So if you want some more information about that, let me know. I've included a flyer attached to this email so you can check it out. Have a great, productive week. I'll talk to you next week. And if you know somebody that would watch this video, please share it with them. Give me some comments, and we'll talk to you soon. Bye-bye.